Everybody. Nice to see you all this afternoon. Today we will have an agenda on the topic of the development of banking industry and its impact on the financial system in Indonesia and Australia. This agenda is guest lectures, especially for the LLM students, Master of Law students in Faculty of Law, Universitas Gadjah Mada, and also master student from the regular class under the subject of comparative banking law. And for today's agenda, we have two guest lecturers. They are Ibu Rosalia Suci Handayani from Bank Indonesia, and the second guest lecturer is Dr. Andrew Godwin from the Faculty of Law, Melbourne University, Australia. For the agenda today will be divided into two sessions. The first one is a presentation by the guest lecturers, and the second one is discussion or question and answers. And for the discussion will be approximately 30 minutes. And previously the discussion also will be delivered by each of the guest lecturers. Each of them will be given 30 minutes. And I think to use the allocated times wisely, we will give the time to the presenters, and the first presenters or the first guest lecturers is Ibu Suci Handayani or Ibu Rosalia Suci Handayani from Bank of Indonesia. And I think I need to let you know about Ibu Suci Handayani. As I said previously, that Ibu Suci is Executive Director, Head of Legal Department, Bank of Indonesia, since 1991. So I think she is the correct person to give guest lecturing for today, since our topics is about the development of banking industries in relation with the financial institution and financial sectors. Ibu Suci will deliver the presentation, the development of banking industry in Indonesia, and she will cover some of the materials related with the legal basis and functions of the banking industries, and then banking regulators. Next, about the development of banking industry and financial system stability. So I think this is the time for Ibu Suci to deliver the presentation. So the floor is all yours, Ibu Suci.
Thank you, Ibu Irna. Good afternoon, everybody. First of all, I would like to thank Ibu Irna and the Law Faculty of Gadjah Mada University, my alma mater, for this opportunity for me to share my knowledge and my experience related to banking industry in Indonesia. Hopefully, 30 years experience works with Bank Indonesia will be help me to share what happened in Indonesian banking industries. I would like to provide 4 agenda. Firstly is legal basis and function of banking industry, then the banking regulators in Indonesia, then the development of banking industry, and the last is financial system stability in Indonesia. Next slide, please. the development of banking industry in Indonesia exactly like start in 1988 when Indonesian government opened for the banking license. Then we call at the time Pakto, October package in 88. Then we then issued the new banking law in 1992. The banking law is very basic legal basis for banking industries at the time, and then amended by law in 1998. And then in Sharia banking, we issued a new law in 2008. We also have foreign currency flow exchange rate system law in 1999. And then we also issued Fund Transfer Act in 2011. In the regulator sectors, we have Bank Indonesia Act in 1999 after the financial crisis in Indonesia, and it's amended several times, lastly in 2008 and exactly 2009. And we also issued the Financial Services Authority Act, we call Otoritas Jasa Keuangan, Undang-Undang tentang Otoritas Jasa Keuangan in 2011. And then we issued the law governing the prevention and handling of financial system crisis in 2016. That is the very basic legal basis for banking industry. There is also about anti-money laundering law also will be the basis of the banking operation. About the function, as we know, the banking institution have a multifunction in our economy. First of all, the ultimate function, of course, is a financial intermediary. The bank will collect the fund from the supply side, from public, and then when channeling the fund to the business sectors, then they call financial intermediary. The banks also provide payment system services, of course, and also we collaborated, we central bank collaborated with banking institution to transmit our monetary policy. There's the function, the very function also for a banking industry in Indonesia. The bank also conducting money market transaction, or we call also money market player, on behalf of their selves as well as on behalf of their customer. And also we also collaborate with banking industry to distribute our banknotes and coins, our currency, our money. Then multi-function of banking institution, we collaborated with industry to, of course, to achieve the economic growth and also monetary macro and macroeconomic stability, and also for financial system stability. Next slide. This is about the regulators in our banking industries. Initially, the only regulator of banking was BI, Bank Indonesia, as the central bank. After financial crisis in 97-98, there is an idea in the government to establish a new bank supervisory agency. The mandate to establish the new agency is stated in the law of 1999, the BI law. And the establishment itself can happen in 2013. The law on Otoritas Jasa Keuangan, or the law on Financial Services Authority, has been issued at that time. And after that, the regulators in banking sectors being dual regulator, Bank Indonesia still the authority for the macroprudential banking, and the Otoritas Jasa Keuangan being the authority of microprudential in area of banking, also in capital market, and also in non-bank financial institution. At the time and until now, Bank Indonesia conducted macroprudential regulation and supervision in the area of banking. And of course, as central banking, Bank Indonesia have the task and authority as the monetary authority, also the authority for payment system. In this role, we in Bank Indonesia provide regulation, licensing, supervising, imposing sanction, and also acts as a lender of last resort to provide liquidity assistance to the bank. And of course, as monetary authority, we deciding monetary policy stance and conducting monetary operation with banking industry as the big players in financial system. We also, Bank Indonesia also operating payment system infrastructure to facilitate the payment system in Indonesia. We have a real-time cross-settlement system. We have a national clearing system. And also lastly, we have BI fast payment, digital payment in Indonesia, the very new infrastructure we provide for our society. The OJK, the Financial Service Authority, have the task to regulating, licensing, supervising, imposing sanction and consumer protection in the all area of financial institution, in the area of capital market, banking, also non-bank financial institution, including micro financial institution. Between Bank Indonesia and OJK, we have close cooperation and coordination. We have a joint decision that regulating how we have to coordinate and cooperate in conducting our tasks and responsibility in the financial system. We also built the integrated system of information sharing and data reporting between Bank Indonesia and OJK. So the reporting from banks and other financial institutions come to go through one portal and going to BI as well as Bank Indonesia system, and we can use the data, the reporting from the financial institution together. Next slide. Next slide. Related to the development of banking industry, I would like to share with you the milestone and event in Indonesian banking industries. As I said, in 1988 through 1992, the government opened for establishment of new banks. Domestic as well as foreign bank is welcome at the time. And then the number of bank in Indonesia is a huge number. At that time is about 170 commercial bank and thousands of rural banks. In 1992, we issuing Banking Act number 7 of 1992 to regulate our banking industry more comprehensively. And in 1997, 1998, Indonesia facing banking and financial crisis, as the other in our regional also facing the financial crisis. At that time, we have to close and freeze a big number of banks, as almost more than 50 banks were closed or freeze, and then to be liquidated or to be sold to new investor. At the time, we amend the Banking Act to catch up with the problem at the time. And the act, we introducing bank restructuring agency. At the time, we call BPPN. We established a new agency with the task to conducting restructuring bank problem, and we suffer very much because we have to use huge public money to recover our banking industry. In 1999, after the crisis, also triggered also with the crisis, we issuing a central bank act. We introducing an independent central bank act. With the act, we also still conducting providing liquidity assistance as our role as a lender of last resort. But with the regulation, it's more strict, more stringent at the time. This law also mandated the establishment of financial supervisory agency, and then we established the FSA in 2013. In 2004, we established the deposit insurance institution. We call in Indonesia Lembaga Penjamin Simpanan, LPS. The LPS have the role to guarantee the deposit, the public deposit, and also handling the failed bank. At the time, up to 100 million bank deposit was guaranteed by the LPS. In 2008, we faced again a financial crisis a bit, and BI law has been amended. At the time, is emergency amendment of Bank Indonesia law to give more relaxation in role of Bank Indonesia as a lender of last resort. At the time, the requirement for collateral for BI liquidity assistance to bank has been relaxed. And the time we also introducing emergency liquidity assistance when we call fasilitas pendanaan darurat for banks. In 2008, at the time of financial crisis, we have a Century Bank case, a quite big case when the regulators have effort to recover the Century Bank problem, and the policy at that time is very much questioning by the parliament, by the politic, and also by the KPK, the corruption agency in Indonesia. And this is a little bit traumatic for regulators, for Bank Indonesia, and also for the government about how to recover the failed bank in proper way and legal way. Then after that, we think that we have to have a more structured regulation law, and also standard of procedures in recovering bank problem. In 2013, we established OJK, as I mentioned before, and in 2016, we issuing act concerning the prevention and handling of financial system crisis. We learn more on our experience in 2008, and then we establish the law that regulating how we deal with problem and how to prevent the banking crisis, and also how we will deal if we face more than a financial crisis again. In 2017 onward, the banking faced the emergence of fintech, the competition with fintech, also the challenge and opportunities with digitalization. Then we have more digital banking services, and also we have the bank will provide all the operation in digital mean. We also have banking consolidation. Quite many banks have merged each other, and then our number of bank become a little bit, the number of bank little bit decreasing. In 2020, as we know, we facing pandemic COVID. Bank also suffer and have to make credit restructuring to recover their position in financial operation. At the time, the government issuing Act number 2, 2020. After this act is issuing in emergency condition. At the time, we strengthening also the power of Minister of Finance, BI, OJK, LPS to maintain the financial system stability. Next slide. This only the type of bank. We have commercial banks and we have rural banks. The rural banks, the number is 1,000 rural bank. And for the basis operation, we have conventional base and also Syariah base. In regard of ownership, we have state-owned banks, we have regional development banks, we have also domestic private bank, of course, and we also have foreign banks. In regard of grouping based on core capital, we divided into 4 categories. KBMI 4, that's the big bank, the very big bank, and the KBMI 3, KBMI 2, KBMI 1. The KBMI 1, this very small commercial bank. Next slide, please. This is only the development of banking industry based on their size of business. The number of banks now is 107 commercial banks with offices is 31,000. This is necessary because of our geography, many islands in Indonesia. In terms of assets, now their asset is about 10 million billion. It's a very big number asset of banking in Indonesia. The capital adequacy ratio is very much good. It's 25%. It's very good now. And their net interest margin still high, is 4 and something, 4 and 63% is too high. We regulator try to encourage bank to decreasing the net interest margin so that the credit to the customer, to the public will be given by the lower interest rate. This is a distribution fund, the credit and financing is so high, and source of fund also quite high. But we now in the pandemic crisis, we have to push bank to provide credit to customer more aggressively, in line with the starting move of the business after the pandemic crisis that almost freeze our business condition. Next slide, please. This is the development of banking in regard of digital banking. We have many regulation in OJK as well as in Bank Indonesia to facilitate how the bank catch up with the development of digitalization in Indonesia. The challenge of digitalization need bank also to provide services in a digital way. This is a challenge for banking and also challenge for the regulator. Next slide, please. For digital banking, then we have many commercial bank, many big bank have a product service in digital way. And also we have quite a new bank because not very new, but conversion for a quite small bank to be a digital bank. We have Bank Jago, BCA Digital Bank, and Bank New Commerce that they provide services only in digital way. Next slide, please. The last part of my presentation is about financial stability. Next slide. We know the importance of the financial system stability. As we know, the financial system is like blood, if I call like blood circulatory system in our body. That is very important in the economy. If the blood circulatory system is not stable, then our body is not going hard. And this is the same if the financial system stability is not stable, then our economy will not able to grow effectively. In financial system also have a domino effect of banking problem. If a big bank or several small or medium bank have a financial problem, then will influence the rest of the banking industry to also having the problem. So we have to maintain the financial system stability effectively. We have lesson learned from financial system crisis in 97 and also in 98 that the financial systems instability or problem and crisis because of the crisis in the system, we have need a high cost to recover the system. So after that, we built a new, more structural and more systematic way to maintain the financial system stability. Next slide. In the financial stability under the law issued in 2016, we established Financial System Stability Committee. In Indonesian, we call KSSK, Komite Stabilitas Sistem Keuangan, comprising of Minister of Finance as the head of the committee, and also the Governor of Bank Indonesia, and the head of OJK, also head of Lembaga Penjamin Simpanan. They call as KSSK. They have duties and authorities about conducting coordination for monitoring and maintaining financial system stability, handling financial system crisis, handling systemic bank problem, also providing recommendation to the president to decide if necessary whenever we on result of our monitoring there are a financial system crisis, the committee should provide recommendation to the president to declare the crisis. And the committee also have to provide recommendation on how the crisis to be managed, the step and the policy. And the recommendation also can comprise of recommendation to activation of bank restructuring program. Next slide. Under the protocol of maintaining financial system crisis, the role of the members has been regulated clearly in the Act and also in the implementation regulation. What's the role of the OJK, BI, and also LPS, and we goes hand in hand to cooperate closely, effectively. The committee meet regularly to assess, to monitor, and to decide the policy to maintain the financial system stability. I don't want to read the specific. You can it because of the time. Next slide, please. This is also how the committee shall work to maintain the financial system crisis. This is our protocol, and the system is goes good, can work good now, but it's not tested, I think, because up to now, and thanks God, we don't face any financial system crisis, and hopefully with our system now, we will more prepared, more ready if anything happen. For summary, next slide, please. For the summary, I have 4 points. Banking industry in Indonesia and the regulator as well as the government have learned a lot from a couple times of financial crisis and financial pressure in Indonesia. Banking industry also have to transform their operation to answer the challenge of digitalization and competition with financial technology. The regulators and the government shall be in close cooperation in maintaining financial stability to support the sustainable economic growth. And many policies as well as laws and regulation have been adopted and always to be reviewed to ensure the soundness and well-functioning of banking industries to support national economy. That is my sharing, and the very last is thank you. Thank you, Bu Irna.
Thank you very much, Ibu Suci, for your invaluable and comprehensive presentation. And I highlight several points from your presentation that you already mentions about some important milestones in the banking industries that we have experienced related with the financial crisis in 1997 and 1998, and Indonesia has learned from this financial crisis to move forward in regulating the Indonesian banking industries by, for example, issuing the law on prevention of banking crisis in 2016. And also you mentioned about the response of our governments to respond the development of technology, which is quite impacting the banking sectors by regulating the digital banking too. So once again, thank you very much, Ibu Suci, for your invaluable presentation. And now we move to our second guest lecturers, Dr. Andrew Godwin. And before I give him the time to present the slides, I will read his short CV, curriculum vitae, just to mention about the important experience and also experience of Dr. Godwin. Dr. Godwin is a principal fellow honorary at the University of Melbourne Law School. And he is also special counsel at the Australian Law Reform Commission, who has been assisting into the simplification of corporation and financial services regulation. And Mr. Andrew also has experience as Director of Studies for the Graduate Program in Banking and Finance Law, and also Associate Director of the Asian Law Center at the Melbourne Law School. So Mr. Andrew will present the slides of presentation entitled Banking and Financial Services Regulation in Australia, and will deliver some points of presentation related with the financial regulatory model in Australia, and then sources of banking and financial services law in Australia, the main regulatory agencies for banking and financial services in Australia, and next the regulation of fintechs, financial technology in Australia, and then the last material that will be covered is the regulation of crypto assets in Australia. So Mr. Andrew, the floor is all yours.
Thank you very much, Dr. Nurhayati. Thank you for the invitation to speak to your students today, and also to hear from Dr. Handayani in relation to the banking law in Indonesia. I found it very interesting. As you mentioned, what I would like to do is cover a number of topics in my presentation. And as I go through each of the topics, I'll try to draw a comparison with Indonesia, or make comparative reference to the position in Indonesia. So let me start by talking about the general system of regulation for banking and financial services law in Australia. First of all, Australia, as you may be aware, is a federal system. It has 9 jurisdictions, 6 states, 2 territories, and the federal jurisdiction. So that's 9 jurisdictions of law, separate jurisdictions. Now, in relation to banking law, the federal government, the federal parliament, has power to make laws in respect of the currency, bills of exchange, banking, and insurance. And so in most respects, the regulation of banking and financial services law is now administered by the federal parliament and by the federal regulators. And in particular, much regulation in the area of financial services is undertaken pursuant to Chapter 7 of our Corporations Act. And as you mentioned, Dr. Nurhayati, I'm currently assisting the Australian Law Reform Commission in its inquiry into the simplification of corporations and financial services regulation in Australia. In addition, the federal parliament now has exclusive power to legislate in respect of companies or corporations. Now, I'll mention more about the legislative framework for banking in a few moments. But what I'd like to do now is to talk to you about our regulatory model in Australia. And it's very interesting to compare the model we have in Australia with the model you have in Indonesia, because I note from the comments by Dr. Handayani that you have a central bank, Bank Indonesia, and then you have a regulator, OJK, that is responsible for both market conduct or consumer protection regulation, and also responsible for microprudential regulator. That's different from the model we have in Australia, where we have a separate market conduct regulator and a separate prudential regulator. And that's part of what we call the Twin Peaks model of financial regulation. And I think it's interesting to spend a few minutes on this, because over the past 7 or 8 years, I've spent a lot of my time researching regulatory models, and in particular, the Twin Peaks model and how it's been adopted and adapted by other jurisdictions. It was pioneered in Australia in 1998. So there are basically 3 models of regulation around the world. The first is what's referred to as the institutional or sectoral model. And under this model, you have a regulator for each sector or each type of institution. So you have a separate banking regulator, you have a separate insurance regulator, and you have a separate regulator for the securities sector. And that was, if you like, the most traditional model. And I wonder if that was the model that was originally in place in Indonesia before OJK was established. But as financial institutions have grown larger, in particular, as we've seen the emergence of financial conglomerates, entities that get involved in banking, insurance, and securities, the institutional or sectoral model has become more difficult and more challenging. The second model is referred to as the integrated or super regulator model, where you have one regulator to monitor both market conduct and also prudential regulation. And as I mentioned before, I understand that that is the model that's adopted in Indonesia, where you have Bank Indonesia as the central bank, and you have OJK as the integrated regulator, namely regulating both market conduct and consumer protection, and also prudential regulation. So this model was also adopted by the United Kingdom before it moved to a Twin Peaks model in 2012. So let me tell you a bit more about the Twin Peaks model in Australia. As I mentioned, it divides regulation between 2 regulators, the Twin Peak regulators, one that is responsible for market conduct and consumer protection regulation, and the other is responsible for prudential regulation. And one of the reasons why this model is quite effective, I think, is that it does avoid certain conflicts of interest that may arise in the integrated model. And it also enables each regulator to focus clearly on its mandates. But one of the key issues with the Twin Peaks model is to ensure that there is appropriate coordination between the Twin Peaks regulators. And this is a point that Dr. Handayani made in her comments, the need for information sharing and integration between Bank Indonesia as the central bank and OJK as the integrated market conduct and prudential regulator. So the Twin Peaks model in Australia was adopted in 1998 following an inquiry called the Wallace Inquiry. And as I mentioned, there are certain features that are necessary in order to make this model work effectively. One is for each regulator to have clear mandates, clear responsibilities and objectives. Each should have operational independence in terms of supervising its area of regulation. There needs to be appropriate funding for these regulators, and also they need to be accountable both to the Parliament and also the government and the people more broadly. And finally, as I mentioned, it's very important to have effective regulatory coordination in the form of information sharing, in the form of enforcement, cooperation, and also in relation to issues that are common to both regulators. And one area in this regard I would suggest is financial stability. In Australia, the central bank, the Reserve Bank of Australia, is primarily responsible for financial stability, but the prudential regulator, the Australian Prudential Regulation Authority, also has an important role to play in financial stability. And of course, the market conduct regulator also needs to concern itself with issues to do with financial stability. So that's an area in which you need to have coordination between all of the regulators. And I might add that the central bank, the Reserve Bank of Australia, the prudential regulator, APRA, and the market conduct regulator, the Australian Securities and Investments Commission, ASIC, together with Treasury, they belong to a council called the Council of Financial Regulators. And it's at this council that issues to do with coordination and in particular financial stability are discussed. So has the Twin Peaks model been a success in Australia? Well, I think it has been a success, but as I mentioned, it does depend on effective coordination and cooperation between the regulators, effective information sharing. And increasingly, over the past few years, we've seen the two Twin Peak regulators getting involved in co-regulation, areas in which they have, if you like, joint regulation or co-regulation. And an example of that is in superannuation or the national pension scheme that we have in Australia. Now, it's interesting to note that of all of the jurisdictions that have adopted the Twin Peaks model around the world, no jurisdictions have yet moved to another model. The number of jurisdictions that have adopted the Twin Peaks model is still quite small, but the relevant jurisdictions include the UK, Belgium, New Zealand, the Netherlands, and more recently, South Africa. So let me now talk a bit about the sources of banking and financial law, financial services law in Australia. Dr. Handayani from Bank Indonesia mentioned the legislation that relates to banking law in Indonesia. Similar to Indonesia, we have a central bank act. It's called the Reserve Bank Act that governs the Reserve Bank of Australia. In addition to the Reserve Bank Act, there's a separate act that regulates each of ASIC and APRA. And there's also a Banking Act that regulates the operations and activities of banks. But in terms of financial services, the financial products that banks offer, and the obligations to which they are subject. Most of these requirements and provisions are found in Chapter 7 of the Corporations Act, which governs financial services, whether they be provided by banks or any other financial institutions. So we have a very big, a very detailed act called the Corporations Act, and Chapter 7 of that regulates financial services. If you look at the framework of law in Australia, it consists essentially of 3 levels. You've got legislation and the special regulatory statutes, such as the Corporations Act that I just mentioned, and you have delegated legislation that is made pursuant to the primary legislation. We also have a lot of law that's found in what we call the general law. And this includes case law, the law that's made by judges, because Australia is a common law jurisdiction, and therefore the courts are a source of law alongside Parliament. Even though Parliament is supreme, nonetheless, the courts, in interpreting legislation and in resolving disputes, make law that is binding. And so general law is also an important source of law for banking and financial services, particularly as it relates to concepts such as the trust and also the duties that banks and other financial institutions have. For example, when they act as financial advisors, they assume a fiduciary duty, and a fiduciary duty is governed by the general law, in particular the law of equity. And finally, you have a level of law that one might refer to as soft law, and that includes regulatory guidance from regulators such as ASIC, but also industry codes, such as the Banking Code of Conduct that applies to banks. So let me talk a bit further about these different areas of or sources of law. A lot of the legislation in Australia, particularly the legislation governing banking and financial services, is very detailed and very prescriptive. And one of the reasons why the Australian Law Reform Commission is currently examining how we might simplify the law is that it has become too prescriptive, too complex. And so one of the possible solutions is to move towards a more principles-based style of regulation. And I've included on this slide some information from a previous report of the Australian Law Reform Commission that outlines principles-based regulation and how it differs from rules-based regulation. Of course, I think, as I'm sure is the case in Indonesia, you need to have an appropriate balance of all of these different styles of regulation, principles-based, rules-based, and all of the other different types of regulation or regulatory styles that exist. APRA, which is the prudential regulator, issues prudential standards, which are rules made under the relevant statutes or legislation, including the Banking Act. And these standards relate to a broad range of issues, including one that Dr. Handayani has already mentioned, namely the rules relating to and the standards relating to capital adequacy. And so one source of law, if you like, is the prudential standards that APRA issues. And these apply to prudentially regulated entities, including banks, superannuation funds, and also other prudentially regulated entities such as insurance companies. And finally, I mentioned that there's a lot of regulatory guidance in Australia that's issued by regulators such as ASIC and APRA. Now, this is just guidance. As noted on this slide, the courts in resolving disputes and interpreting the law are not bound by what the regulators say in the guidance. And the interpretation by the regulators may be challenged by parties and may be considered by the courts, and the regulator may need to modify its guidance if the courts disagree with the interpretation of the regulators and create or make law that changes the position. On this slide, I've noted that there's a lot of regulatory guidance on ASIC's website, and the purpose of the guidance is as set out here, namely to explain how ASIC exercises its powers, how it interprets the law, and also to give practical guidance for all of the regulated entities. And these are not just banks, they include financial advisory firms, they include, of course, insurance companies, they include mortgage brokers, and also market operators such as the Australian Stock Exchange. Finally, let me just mention the industry codes. These are an important part of the regulatory framework. In recent years, there's been a move to make some parts of these codes enforceable. The Code of Banking Practice was recently revised, and the most recent version is the Code of Banking Practice, which took effect on 1 March 2020. There are also codes of practice that apply to other areas that are growing and developing, including the buy now, pay later, or BNPL sector, which is quite active in Australia. Let me explain who the main regulatory agencies are in the area of banking and financial services. I've already mentioned their name to you. The Reserve Bank of Australia, APRA, which is the prudential regulator, and ASIC, which is the market conduct and consumer protection regulator. Similar to the position in Indonesia, I think, our central bank has responsibility for the payment system. It also has responsibility for conducting monetary policy and also making sure that the financial system remains stable. And so these are the key regulators in the area of banking and financial services. The regulator, APRA, has a mandate that includes prudential supervision, micro-prudential supervision, establishing and enforcing prudential standards, and also it regulates a broad range of institutions, including authorised deposit-taking institutions, otherwise known as banks, insurance companies, both general and life, and a range of other prudentially regulated entities, including superannuation funds, superannuation trustees, and other types of insurance company. The Market Conduct and Consumer Protection Regulator, ASIC, has a very, very broad mandate that covers the regulation of financial markets, financial services, and also the regulation of companies, corporations. It's the business and company registry, and it also administers and regulates insolvency law and insolvency practitioners, and also credit providers, so entities that provide credit, consumer credit, and also commercial credit are governed by or regulated by ASIC. And what's interesting is that as Australia has been examining crypto assets, the emergence of crypto assets and how they might be regulated, it's been suggested that ASIC should be the regulator for not just financial products or crypto assets that function as financial products, but also crypto assets generally. So this might result in an expansion in ASIC's mandate. I mentioned before that ASIC is the consumer protection regulator for the financial sector. We have another consumer protection agency for the non-financial sector, and that is the ACCC, the Australian Competition and Consumer Commission. ASIC has responsibility for financial literacy. In other words, trying to increase the financial literacy of consumers as part of its consumer protection objective. And it maintains a website called the Money Smart website, which contains a lot of information about consumer protection as it relates to financial literacy and other areas that are relevant from a consumer protection perspective. Fintech is an increasingly important part of the financial sector in Australia. And as we see in Indonesia, a lot of fintech companies have established themselves in Australia and are getting involved across a broad range of areas: payment systems, online banking services, financing platforms, including peer-to-peer lending and crowdfunding, and also the delivery of financial services through the use of technology. And that includes robo-advice, and that's been quite active in Australia as well. And as is the case in many other jurisdictions, there are a number of important issues that arise in relation to fintech. These are issues that are relevant from both a legal and regulatory perspective, and they include data privacy, cybersecurity, anti-money laundering, and also financial crime generally. Now, Australia has what we call a regulatory sandbox, which is designed to give startups, fintech companies, an environment in which to test new products and new services without being subject to all of the regulatory requirements. And we also have a regulatory innovation hub that's maintained by ASIC that is designed to provide support to fintech businesses to enable them to understand and navigate the regulatory requirements so that they are prepared when they come out of the sandbox. Now, I thought it would be interesting to note that Australia has entered into a number of cooperation agreements or memoranda of understanding with regulators in other jurisdictions. And the primary purpose of these documents, these agreements, is to provide a framework for cooperation, and also in some cases to provide a basis on which one regulator, a regulator in one jurisdiction, can refer businesses to the regulator in the second jurisdiction. Australia has a fintech cooperation agreement with Indonesia, OJK, to promote innovation in financial services. This agreement just deals with information sharing. It doesn't include referrals, but one would hope that in the future, the two regulators will become actively involved in helping businesses in each jurisdiction to understand the requirements in the other jurisdiction. And I've included on this slide just some research that I've done in the area of sandboxes and cross-border cooperation agreements. Finally, what I'd like to do in the 5 minutes or so that remain is to talk to you about law reform, particularly in the area of crypto assets. So crypto assets come in many different shapes, sizes, and forms. You have, of course, cryptocurrencies. You also have a range of other types of crypto asset, including different types of tokens, such as utility tokens, securities tokens, exchange tokens. We have a very broad definition of financial product in Chapter 7 of the Corporations Act. And remember, that's the chapter that regulates financial services and financial products in Australia. And this definition is very broad and it's functional in nature. In other words, a financial product will be regulated by Chapter 7 if it involves one or more of these three functions: making a financial investment, managing financial risk, and that would include, for example, derivatives, or making non-cash payments. And that might include, although it doesn't at present, but it might include in the future, cryptocurrencies. Now, whether a crypto asset is within or outside the financial regulatory framework depends on the features or characteristics of the asset and whether it falls within any of these categories that I've just mentioned. And the Australian government, through the Department of the Treasury, is currently looking at potential reforms to regulate crypto assets, either by expressly recognizing them as a financial product or by adapting the regulatory framework to accommodate crypto assets. And we've already had a couple of important inquiries or reviews, one on the Australian payment system and the other on how we can promote Australia as a technology and financial centre. And I also mentioned the inquiry in which I'm currently involved, namely the Australian Law Reform Commission's review of corporations and financial services regulation. I've included on these slides some of the recommendations of the first two reviews. And as you'll see, Australia is interested in regulating digital currency exchanges. We're interested in recognising decentralised autonomous organisations. And we're also interested, as I'm sure Indonesia is, in the possibility of launching a central bank digital currency. So that's all I wanted to say about Australia, Dr. Nurhayati. I hope that's been of interest to your students. I'm very happy to take any questions about any of the topics that I've covered.
Thank you very much, Dr. Godwin, for the invaluable and also comprehensive presentation. And if I may to highlight some of points from your topics that Australia adopted or accommodate quite different regulation with Indonesia in banking sectors. You say that Australia adopted Twin Peaks model, which is there is a separate regulation on market conduct and consumer protection, and also prudential regulation. And as you mentioned that there are two main regulatory body, the ASIC and also the APRA. And you also mentioned that Australia also adopted the regulatory sandbox for responding the development of technology, for example, in the form of fintechs, and then also startup company for example, the P2P lending, crowdfunding, and also the digital banking. So I think it's also quite similar with the practical aspect in Indonesia, because OJK also accommodate or applied this regulatory sandbox in Indonesia. So thank you very much for your invaluable knowledge and experience, Dr. Godwin. And ladies and gentlemen, our lovely students, so we will move to the next session, that is question and answer. So if you have questions to the speakers, please just raise your hand. Any questions from the students, from the participants? Okay, there is Mas Oki, yeah, Mas Oki Rahmadi. So, okay, one questions. Any other questions from the participants? Okay, I think while waiting for the other questions, I think I will give the time to Mas Oki to send or to deliver the questions. Please, Mas Oki.
Yes, thank you, Dr. Erna. And well, my questions will, I need to introduce myself first. My name is Oki Rahmadi. I'm a corporate lawyer in Jakarta, and I put a lot of interest in banking transactions. And well, my questions maybe Dr. Rosalia Suci, if you, I'm sorry. Hello.
Yeah, please go ahead, Mas Oki.
Yes, I'm sorry. Well, Dr. Rosalia Suci, well, I need to well, my question is about, well, one of the roles of the BI is to supervise, right? To supervise the banking transactions. And I've heard that BNI has already become a member of the GPI Swift. And GPI Swift is an online transaction which is also accommodate the IP to IP transactions, IBAN to IBAN, and then FIN, and then I put a lot of questionings about the positions of the BI on supervising this kind of transactions, while the transaction itself conducted through the GPI Swift system that BNI has already become a member. I've seen one of the transactions with the code of MT103 and then MT199, and then when it came to 202, a hacker intervened this transaction. So this kind of transactions have a lot of it's vulnerable. It's very vulnerable because this online transactions will be exposed to hackers and other perpetrators with abilities to conduct such a crimes, right? But so how do actually they position itself in this kind of transactions?
So your question goes to Ibu Rosalia Suci, Mas Oki, is it correct?
Yes.
And it's
yes,
questioning about the role or the function of the Bank of Indonesia in supervising the transaction conducted by bank, BNI, in this context?
Yes, through the system, the new system that BNI, Bank Negara Indonesia, Bank Negara Indonesia has become a member of GPI Swift, right? And then this kind of transactions conducted from this is transactional transactions, right? And then this kind of transactions conducted online with an online system. How do the BI actually supervise these transactions? Because it is exposed to hackers, and this kind of transactions, this kind of exposure will be it's unadvantageable to the consumers. So it became a problem. I've seen one actually.
Okay, Ibu Suci, could you
Yeah,
unmute?
sorry. Yeah,
Thank you very much.
Yeah, thank you, Pak Oki.
Thank you, Ibu.
Could you please clarify BNI member of what? Member apa? Mungkin bahasa Indonesia?
GPI Swift, Bu.
GP?
GPI Swift.
Swift.
Yes.
Swift, yeah. Bank Indonesia do the role to supervise payment system. Actually, the payment system in Indonesia and also cross-border, if there is any cross-border relationship between banking in Indonesia and in other country. When a certain bank to provide services to the customer become a member of a certain system or certain set of infrastructure to conducting transaction, then it will fall if there is only a payment system that is fall under the supervision of Bank Indonesia, but when it is also transaction, financial transaction on behalf or provided to the customer, it's also be the product, banking product, the prudentiality should be also supervised by the OJK. Any product, any new product provided to the customer, it should be under supervision of OJK before it be launched. Then OJK also supervise the prudentiality aspect of the product. If the product is a payment system, then Bank Indonesia also supervise, especially when the method of the payment system will connect to infrastructure payment system in Indonesia. I'm not so clear the problem whether the membership to the SWIFT, if to the SWIFT, I think it's so clear. No, never any. It's a little problem about SWIFT. The system is reliable and no problem. I don't know about the GPA. GPA, what is GPA? I don't know very much about member of GPA.
Perhaps just by way of comparison, I might note that in Australia we have an agency called AUSTRAC, which is the Australian Transaction Reports and Analysis Centre.
Yeah.
And it has responsibility to monitor financial transactions, to identify money laundering, organised crime, tax evasion, and other problems such as terrorist financing.
Yeah.
So we have a separate regulator in Australia that looks after the financial crime side of transactions. And that's becoming increasingly important and busy, particularly in the context of cryptocurrencies, where we now have a definition of digital currency in the legislation that governs AUSTRAC, the payments legislation. And I think this is one of those areas that is increasingly important, and in all jurisdictions, regulators need to pay more attention to the problems that you mentioned, hacking, and also the security of financial banking transactions. Also, of course, data protection and privacy. So this is an interesting area in which I think we'll see quite a bit of development in law reform in the next few years.
Yeah, in Indonesia, we also have like Austrac, we have PPATK, we have Indonesian FIU, like Austrac.
Oh, yes.
Any bank, any financial institution should conduct know your customer principles, and then they have to identify suspicious transaction, and to report to the PPATK, and the PPATK have the power to trace the transaction, to questioning, as well as to freeze the flow of fund if necessary, and so they have quite big power to trace the transaction, the financial transaction.
Thank you for the question.
Thank you very much, Ibu Suci, and also Dr. Godwin for answering the question. I hope Mas Oki.
Yeah, first I want to also add information that I'm not have the title of doctor. I just Ibu Suci. Sorry to make it a clarification.
Okay, Ibu Suci. Yeah, thank you, Mas Oki, for the questions. And from the chat box, there is a questions. I think it goes to between Bu Suci and also Dr. Godwin. Yeah. The first questions, what is the weaknesses and also the advantages of the blanket guarantee regulation or blanket guarantee policy? And then the second questions is about the response from jurisdiction or countries with regard to the separation of supervisory towards banking industries from the central bank. And then, the last question, the difficulties of Australia in synchronizing crypto asset to the conventional in Australia. So, there are the questions. I think, Bu Suci, maybe you want to answer first, please.
Yeah, thank you, Bu Irna. The first one is about blanket guarantee. As you all know, in the first place, Indonesia facing the necessary of the guarantee of deposit. That is at the time we face a financial crisis, and the trust to the banking system is so low, decreasing very much. Then the government introducing the government blanket guarantee for deposit. At the time, not only deposit but also certain obligation liabilities of the bank. But I think what we talk now is about blanket guarantee for deposit. It means the whole deposit of the customer should be guaranteed by the government or the agency of the deposit guarantee. We think that for now is not the proper policy, because first, the cost is too high. The cost for guarantee of the deposit is borne by the industries, by the banking itself, not by the government. So the guarantee is backed up by the premium from collected from the industry. So the capacity to guarantee it's not too big. If to guarantee the whole amount of the deposit is not a proper policy. The second, it's also need for the literacy for the customer. The customer put their money in the bank, either in the current account or deposit account, or in the deposit certificate. It should be understand that it's always any risk. The bank should also, the customer should also understand and want to know about the condition of the bank, the soundness of the bank, the credibility of the bank. So there is a part of the customer to mitigate the risk on their own. So the deposit guarantee is not for the whole amount of deposit, for the big number of deposit. So the policy from the government in Indonesia, we guarantee only up to 2 billion rupiah deposit that should be guaranteed. The rest, if customer have a big deposit, then the rest is not guaranteed by the LPS. That is the policy to make balance between keeping the trust of the customer to banking, especially for small customers to be protected. Also the trust to the banking also ensure, but the customer also have to understand the risk to put the money or the whole money in the same bank or in the certain bank that they are not really know the soundness of that bank. The third is the capacity of the LPS, the Deposit Insurance Agency, to cover the guarantee. It's not possible to cover the whole amount of the deposit of the customer. And the second question is about the separation of supervisory banking from the central bank. I don't know the direction of the question, whether about the effectiveness or the direction of the question, but I think when the government of Indonesia or the authority of the Indonesia separate the supervisory authority from the central bank to the new agency, is to provide more focus in the job of each institution. At the time, the supervisory agency is to be accountable or to be responsible for microprudential, the prudentiality of the operational of the banking, so the soundness of the banking can be maintained. And Bank Indonesia as the central bank still in the role for supervising the macroprudential. Macroprudential means the systemic risk of the industry, systemic risk, the systemic risk impact to the, of the industry to the financial system. The Bank Indonesia still in the role as the lender of last resort to provide liquidity assistance, also to do monetary operation to keep the market, the industry with enough liquidity in the market. So maybe the policy to separate the banking supervision to move to new agency is to make each institution, its authority will be more focused on their tasks, and also as Dr. Godwin say, the industry of financial industry has become more complex, more cannot be separated between banking and insurance and other financial institution. So there is need for consolidated supervision under the supervisory agency. In the central bank, it's not possible to supervise all of the financial institutions such as insurance, non-bank financial institution. So the supervisory of the whole financial institution in Indonesia come to Otoritas Jasa Keuangan. That is my answer for this question. Thank you.
Thank you very much, Ibu Suci, for the answers. And for the next question, I think it goes to Dr. Godwin. The participant questionings what is the difficulty in synchronizing crypto asset to the conventional one in Australia? So Dr. Godwin, please.
Yes, I think that's a very good question. Part of the difficulty arises in the different ways in which these assets function. So you might have one crypto asset, it might be a token that can have two or more different functions. It might function as a means of payment. At the same time, it might function as an interest in a business. And quite often crypto assets can change their function or form after they've been created. And so what we need to do, I think, is to look at the function of the asset and to make sure that it's subject to the right regulation at the right time. A key challenge in all jurisdictions around the world is whether they should adapt the existing framework, regulatory framework, to accommodate crypto assets, or whether it would be better to create a separate framework for crypto assets. I'm still thinking about this question myself. I'm inclined to think that it would be better to adapt the existing framework to the extent possible, because if you have separate regulatory frameworks for crypto assets, that increases the risk of arbitrage. In other words, the risk that parties in the market will design their transactions in such a way to fit them into the crypto asset regime, and that they will avoid or circumvent the requirements that would otherwise apply if you were dealing with a financial product. So I think it's very important to make sure that we don't create different frameworks, different regimes that conflict with each other or provide the opportunity for arbitrage. But we see this also in the context of not just crypto assets, but decentralized autonomous organizations, new forms of doing business that are based on blockchain and that may look very different from the conventional company form. To what extent do you treat them as a company? To what extent do you treat them as some other type of entity? These are challenges that really all jurisdictions around the world are currently having to consider. But my view at this point, at least, is that to the extent you can regulate crypto assets by reference to the existing regulatory framework, that's probably good, because it's better to have an integrated, unified framework rather than to have separate regimes or frameworks for crypto assets. But we're all currently considering these issues, and I'd be very interested to see where Indonesia goes in this regard. I think Indonesia has enacted some legislation that is quite technology specific and that does encourage financial technology. And to that extent, I think Indonesia is a bit different from Australia, where we've tried to fit innovation within the existing framework. So Thank you for the question, and I'll be interested to see where Indonesia goes in this regard, including, of course, in relation to crypto assets.
Thank you, Dr. Godwin, for your explanation. And Ibu Suci, there is one more question goes to you. Is it available for you to answering the question, as you said to me that you will be have another agenda at 2:30?
For one question, okay. I just check.
In the chat box.
I still wait for the other meeting. Yeah.
Okay. So the questions is a central bank for digital currency a viable option in the future of Indonesian banking system, or would the existing system of Bank Indonesia and OJK provide adequate supervisory and regulatory system for the ever-growing digital currency market? So that is the questions. Ibu Suci, please. Thank you.
Okay. Thank you, Bu Irna. First of all, of course, in the pipeline of Bank Indonesia as a central bank to come with a central bank digital currency, we think that is indispensable. It should to be happen, but we are on the road to that place. How about the digital currency issued by private? Up to now, we still in the position that we will not allow the private to issue a currency to be used for media of payment in Indonesia. If the crypto treated as asset, it's still possible, but it's not possible to be treated as a currency or it's a money to use to payment for payment. It's not allowed up to now, and maybe until the future. The central bank in the road to issue the central bank digital currency, maybe the rupiah digital currency at the next in the future, but we now still in the study and also in collaboration with other central bank, learn from other central bank, we will come to the issuing of central bank digital currency. Now we allowed only crypto as an asset that transacted in future market, not in the banking market and financial market. That is the for now the position of the central bank and the government. The payment system in Indonesia should not receive cryptocurrency from whatever private company. And the financial institution is also not allowed to receive cryptocurrency as media of payment. Thank you.
Thank you very much, Ibu Suci. I think it's quite comprehensively answering the questions from one of our LLM student, Gemi. So thank you, Gemi, for the questions. If there is no more questions, I think this is the end of our guest lecture agenda, and because also Bu Suci will have the next agenda in Bank of Indonesia. So ladies and gentlemen, and also our distinguished guest lecturers and all of our lovely students, I would like to first and foremost express my appreciation to the two of our distinguished guest lecturers, Ibu Suci Rosalia Suci Handayani from Bank Indonesia, and Dr. Andrew Godwin from Faculty of Law, Melbourne University. Thank you very much for your sharing knowledge and experience to our students. We believe that your sharing knowledge and experience will be beneficial to our students, and I think our students also can learn from your knowledge and experience, not only for the study, but I think after they graduated, this insight will be with them. So once again, thank you very much to Ibu Suci and Dr. Godwin, and also thank you very much for the committee from the Master of Law program, Faculty of Law UGM. Also, thank you very much for our LLM students for your participation and also for joining in this guest lecture agenda. So,
Thank you very much.
Thank you very much.
Thank you,
Thank
Dr.
you,
Godwin.
everyone.
Thank you, Bu Suci.
Thank you.
Best
Terima
wishes.
kasih.
Thank you, Dr. Godwin. Thank you.
Thank
Thank
you,
you.
Ibu Handayani.
Ya. Terima kasih Bu Nurhayati, Bu.
Terima kasih, Bu Suci.
Terima kasih.
Jangan kapok ya, Bu, next time.
Siap. Kami pamit ya. See you later.
Terima kasih.
See you, everyone.
Terima kasih, Ibu Imelda juga. Sukses.
Thank you.
May I leave? Thank you.
Ya, monggo Ibu, silakan. Terima kasih.
Bye-bye.
Bye-bye, Dr. Godwin.